Hello everyone, it's Taylor here from Stonebridge. Hope everyone's having a good start to their spring and is enjoying the warmer weather. We certainly are here up in Metro Detroit. Here to talk for a couple of minutes about the markets, what kind of occurred in Q1 and what we expect, or at least we're paying attention to and are looking forward to in Q2 and the rest of the year here. The first quarter, certainly was a bit of a roller coaster ride, both in the stock and bond markets. Volatility was certainly present for two primary reasons. Early on in the quarter, it was primarily volatile because of the uncertainty around how pervasive artificial intelligence is becoming in the economy, and especially its projected outlook on employment and the need for certain services. And then probably the second one, which is more front of mind and top of mind for everyone right now, is the conflict in the Middle East. Speaking of the conflict in the Middle East, over the last 45 or so days, it's been reiterated and reconfirmed just how important that Strait of Hormuz really is for the global economy. With 20% of the world's liquefied natural gas, or LNG, and nearly a quarter of the petroleum market across the globe moving through the strait, the blockades, the lack of passage for vessels through the strait has certainly created upward pressure on oil prices. Oil prices, not only obviously elevated oil prices creates pressure on prices for inputs, transportation, etc. Oil still touches almost every part of the global economy at this point. The primary concern long term there is its impact on inflation. It can have downstream effects, putting upward pressure on inflation. Historically speaking, the Fed has tried to look through oil price shocks when dealing with monetary policy, and that's what they reiterated during their March meeting is the plan. But it's certainly a possibility that if we see some sort of elongated conflict in the Middle East, or that oil prices stay elevated for a period of time, it could have some longer term inflationary pressure. And I think that's something that investors have to potentially grapple with, and we're going to be continuing to monitor is, if inflation does kind of rear its ugly head again, it's possible we'll have to deal with a more hawkish Fed than what they came into the year with regards to and expectations. And that would certainly create more pressure both in the stock and bond market, especially in the bond market, as less rate cuts would drive higher yields and therefore affect prices as well. So certainly something we're monitoring at this point. The Fed's been pretty resolute about their desire to look through it, but that can only go so far. So something we're certainly going to pay attention to and continue to pay attention to. Also happening in Q1, more aligned with the stock market, was investors stayed a little bit more interested in stocks outside of just the tech sector in the U.S., which is good. It's not just the Mag 7 driving returns, and while the Mag 7 will certainly, still have a major impact on, market indices and stock market performance, over the course of the long run here, it's healthy for investors to be rewarded for diversifying, not only from a size standpoint, a sector standpoint, but also from a geographic standpoint. And so, again, diversification for so many years was kind of out of vogue. Over the last 18 or so months, it's proved its value, and part of the reason why we continue to preach it, frankly, as well. So, good to be diversified. We're going to stay that way. I think AI, interest rates / inflation, and the conflict in the Middle East, or geopolitical conflict as a whole, will continue to be the main drivers of market performance over the course of the next year or so. Obviously, you can't predict the future, but that's what we're paying most attention to, where our primary focus is at this point. Corporate earnings do remain strong. As long as they continue to remain strong and continue to grow at a pace above expectation, which they have, and hopefully inflation remains under control, which at this point, so far so good. I think there is optimism for investors moving into the rest of the year, but it's certainly, if there's one thing we've learned, and we all know as investors for a very long time, it's that you can't predict the future. Uncertainty is going to happen, and it will always be there. And all we can do is continue to stick to our discipline plan, sound investment principles, and that's what we're going to continue to do. So, quick little recap update. Obviously, if you have any questions, please reach out to me, your advisors. If you're seeing someone different here, we're always here to help. On another note, I hope everyone has a great start to their summer. It's right around the corner. It's crazy each year we say it, but it continues to get crazier. And specifically for people who are around here or want to come in, we do have our golf event. I believe it's June 26th, the Stonebridge Cup. We'd love to see you guys. Whoever wants to join, please feel free. I think the invite, if it hasn't already gone out, it should be going out soon. But June 26th, it's a Friday. It's a great time. Hope to see people there. Thanks again for your trust. Hope to hear from you, and we're always here. Thanks.